We are now at the 89 days left until the cycle bottom, as shown on Cryptological.app. Why? But why? Why are we predicting 89 days until the bottom? And it's not just me. There's many other people that have reached this conclusion, probably independently. Maybe a few are jumping on the bandwagon, but if you look in the data, you can work it out for yourself. First, let's go and look at the monthly returns. If we have a look, we can see the monthly returns for Bitcoin in every year since it's been created. And if we go down to the average, what do you notice about these two? If we look up at what months they're in, August and September. On average, August and September, since Bitcoin was created, are always red months, on average. The only ones. And you might say, okay, well, early on in Bitcoin's history, there was a lot of volatility. Maybe it's skewing the data. We see some like really large numbers in here that could be skewing it, like, you know, like the 346%, etc. So we can go, okay, let's maybe start from when it was a little bit more mature. And now look. Okay, there's some other red months in there too. But August and September, still red. They're still red. We're in July right now. July historically has been a pretty good month. Also, it's followed by two pretty bad months. So if we're wondering why we could be approaching a low in 89 days, in that sort of time period, it's because that gives August and September a chance to have their effect. What do we got? About 60 days there. We got about 15 days left of July. So that basically gets us into that window. Now, October's pretty good historically. It's one of the best, actually, in terms of average returns. Another way we can visualize this is by breaking it down. So we've got the each year of the Bitcoin cycle at the top, and then the month down the sides. So what do you notice about August and September? 3 out of the 4 of the cycle years are red. In August, the post-halving year is green, and in September, the halving year itself is green. But Bitcoin struggles in August and September. Historically, it's just what it does. Don't take it up with me, just look at the data. That's just what the data's saying. And so that's really one of the main reasons why it starts to make sense to predict the bottom being in October, in early October. Or at least the window being from sort of early to late October this year. This is also backed up by other indicators, which would reset if we get a weak August and September, like the MVRVZ score. Bitcoin has always gone below its realized price. Every bear market, it's just what it likes to do. It likes to get down there to reset before we start moving in the opposite direction again. So this year we haven't yet crossed the realized price, but if we have a weak August and September, it could very well be possible that we'll get back down below this zero line, below the realized price, and reset the MVRVZ score. We can also look at some other indicators. The risk levels, we've always gone down to these very low levels in Bitcoin's history. We're not quite there yet. There's no guarantee that we're going to. But the data suggests that if Bitcoin just carries on doing what it's going to do, or what it has done, if it carries on doing what it's done in its history so far, then we're going to see these same patterns repeated yet again. So with that being said, it's a pretty good time to start DCAing Bitcoin, in my opinion, not financial advice, at these levels. Because if we're not at the bottom yet, then it's probably quite close by. And what you can do is you can use a tool like the Dynamic DCA Simulator and come up with your own strategy. So you can set levels where indicators get to a certain level, either on the low side or on the high side. And you can say that you'll only buy at those levels, and then if it goes into the extremes, either up or down, that's when you'll increase your dollar cost average, your buys, your purchases, or your sells. It's a really useful tool just for taking emotion out of the market and trying to make any big lump sum investments at market tops or bottoms, which is very, very difficult and very risky, frankly. But if you dollar cost average over time during periods of strength or weakness, you can generally smooth out the risk curve of your own portfolio, which I think is a good move. All these tools and these charts are available on cryptological.app. Everything is free. As we're running this 100-day window promotion, I guess, free premium access for everyone who signs up for a free account. You can access everything on the chart. You can have a look at all of the features, all of the information on here, how we calculate stuff, why we've made these decisions. I say we, it's just me. It's just a solo venture. But yeah, come and check it out. It's going to be free until I can't afford to host it for free anymore, or until the 100-day window runs out, and we're probably going to be at the historic bottoms. That's all I've got time for today. Thank you for listening. Until next time, take care.